All right, well, let's get to it. So for today, the idea is to quickly introduce myself and our company, Everlance, introduce our tax partner, Knox, and also get to the top questions asked by taskers, and then we'll share a few opportunities for discounts on potential tax filings, and then additional resources as well. We'll also be sure to email this to everyone at the end of the webinar, so you have all this good information. Another question is, are you part of Braintree? We are not part of Braintree. Everlance is a good time to introduce our company. My name's Alex. I'm the CEO and co-founder of Everlance. Everlance is a software company based in San Francisco, and we make the Everlance app. The Everlance app makes it super easy to track your mileage and expenses, and we think it's great for self-employed and independent contractors. We're partnered with TaskRabbit to help get the word out. And so, being an entrepreneur myself, I totally understand what it's like to be independent and build a business. I'll get to some of these questions. I'm gonna have a few more questions here. Oh, someone says we can't hear anything. Can other people hear me okay? Okay, good. So maybe that's just an audio question for one person. Our app, the way we think about Everlance is really that traditionally what you do, looks like a lot of people are having trouble hearing, is to record your business mileage and expenses. There's the two most commonly things used even today are literally a shoebox or an envelope that people put their business receipts into, and then a paper mileage log. And so a paper mileage log might just be lined paper, or it could be something you buy from Office Depot, but it's where you record a from location, a to location, a date, and a purpose, and you do that to claim those business miles off your taxes. So our app automatically does that for you using GPS and credit card syncing. And then it's kind of like Tinder for your taxes, where you just swipe something to the left if it's personal and you don't want to claim it as a deduction on your taxes, or you swipe it to the right if you want to claim it for work. So that's Everlance. My name's Alex. I'm an entrepreneur, and I'd love to introduce you now to our tax partner, Knox. I think you got to unmute him, Jake. Hey guys, sorry. Bear with me 1 second here. Looks like he's not getting unmuted.
Unmute. Try from the here. Let me claim the host. See what happens. Okay.
Awesome. Thank you. Sorry about that, guys. A little bit of technical difficulty. My name is Knox Wimberly, and I am an enrolled agent, which is just kind of fancy speak for I hold the highest credential that the IRS awards to tax professionals. So we're kind of like a CPA or a certified public accountant, but CPAs are licensed at the state level. I'm actually licensed at the federal level. So instead of being 500,000 CPAs in the country, there are about 50,000 active enrolled agents in the country. And I am one of those. I am considered one of America's tax experts. I've taught tax practitioners all across the country. And you'll hear a little bit more about the company for which I work and what our practice looks like a little bit later. But we do a lot of things. I'm a fellow of the National Tax Practice Institute and teach all over. So thank you so much, Alex, for inviting me to be a part of today's webinar.
Thanks, Knox. And I think what Knox is trying to say is this guy is legit. He's an expert, and he's doing today's webinar for free. So if you have any questions, please ask them. He's an expert, and he's here to help. So without further ado, we're going to get into the top questions. And I know folks are asking questions in chat. We'll try to answer those as we go along or at the end. So the first big question is really just, what is the difference between an employee and an independent contractor? Can you tell us about that, Knox?
Absolutely. And this is a great question because it's super, super important for taskers to understand. So when we're an employee, we get a W-2. Many of you have been an employee before when you work somewhere. Some of you are still an employee and you do tasker on the side. But when you're an employee, you get a W-2. And as a part of that, your employer pays half of your Social Security and Medicare. So the total amount that we all have to pay for that is 15.3%. When you're an employee, your employer pays 7.65 and you pay 7.65. That's that part that's kind of withheld from your paycheck each week. Plus, you also have an opportunity to have withholdings towards your actual income tax. When you're an independent contractor, none of that is automatically withheld for you. You, in most cases, receive a 1099, although not always. But when you do work on your own, when you're self-employed, you are responsible for paying your own income taxes and your own self-employment tax, which is the part that consists of the Social Security and Medicare. And so that's really, really important to grasp, that as someone who is involved in your own business, you are responsible for your own taxes. There's no employer to help you to do that. And we'll talk a little bit about how we do that as we move through the webinar.
Yeah, and the way that I think about this, coming from it more from a layman's standpoint, not being a tax expert, is that if you're self-employed or independent contractor, you're a mini business. And as a mini business, you have revenue and expenses, and your job is to pay taxes on your net income. And so the name of the game here is the more expenses that you can claim, the lower your net income and the lower your tax bill. And so experts like Knox and apps like Everlance can help you sort of figure out all those different possible business deductions and claim them. So with that in mind, I know there are a lot of different types of income that you'll do as a tasker. You could be a repairman, you could be a tutor. There's lots of things that'll fall into this category. But maybe Knox, if you could share with us, what are some of the most common ones that you could expect to deduct as a tasker?
Absolutely. So mileage is a biggie, right? And this is where Everlance really, really shines, helping you to track your mileage. So the awesome thing is that when you are self-employed and you are driving from your office, which for most of you is going to be in your home, right? So you're driving from your office to the first place where you are going out and taking care of someone, taking care of that task, whatever that task may be. You are driving to your client from your office. That is deductible mileage. Now you went to Home Depot or Lowe's or Ace Hardware or something like that because you needed to go pick up some supplies. That is deductible mileage. Now you went back to finish that task. That is deductible mileage. Now I went to the next place that I needed to go for the next task. That is deductible mileage. And at the end of the day, I'm returning back to my office. So keeping track of all of that mileage is super, super important. And quite frankly, Alex, this is the biggest pain point, I think, for self-employed individuals, is figuring out how can I keep track of that mileage? And this is where Everlance is really going to shine and help you out because it automates that process. You turn it on and it keeps track of that mileage for you. Then all you're going to do is go in and put what the business purpose of that mileage was, and then let Everlance know, hey, this was a business expense or this was a personal expense. I just, went to church on Sunday. You don't get to deduct that, obviously, but you're going to separate your business expense from your personal expense. And Everlance does the rest, gives you awesome reports that your tax preparer can use. And that is where it really shines. Also, when you went to Home Depot, when you went to Lowe's, when you went to Ace Hardware, you bought those supplies, that is deductible too. And this, I think, gets to what the question was earlier, Alex, when someone said, when I use my own funds to provide for a task, and I think that's what they were talking about. I went to the store and I bought some nails or I bought some glue or whatever the case may be. Maybe I bought a tool, I bought a saw, but I'm using that in my business. That becomes a deductible expense. So you're going to keep track of that. Great thing about Everlance, again, you're going to take a picture of that receipt.
Yeah, so I think I just realized Veronica's question is, what if someone gives you money to complete a task? So maybe I need to repair someone's bathtub and they give me $100 to go buy a new fitting for the bathtub. And I use that sort of in the line of duty of my work. How is that accounted for from a tax perspective?
Yeah, that's a great question. So some of that's going to depend, right? It's going to depend whether you have any markup or not. So say, for example, you go to Veronica and you say, hey, Veronica, Veronica tells me this is $50. We're going to pretend I'm the tasker for the minute. Veronica tells me this is $50. Would you go buy it at the Home Depot? I go to Home Depot. I spend that $50. There was really no income to me. Veronica actually paid for that. So I don't necessarily have to account for that. But let's look at a different scenario. I know that it's going to cost me 50 bucks, but I tell Veronica I'm going to charge 75. In other words, I have some markup there. Whatever percentage it is, doesn't matter. But I have some markup there. Now that is income to me, and I'm going to expense my real cost there as well. So in that case, my gross income for that particular item, 75, my expense, 50. So my net income is going to be 25, but I have to account for that on my tax return. So a real difference in who's paying for it. Am I paying for it, or is Veronica paying for it? Well, if Veronica hands me the 50 bucks and says, would you go pick this up for me? Veronica is paying for it. But if I tell Veronica, you pay me 75 and I know it's only going to cost me 50, I have paid for it. That's kind of the difference there. So I hope that answers the question.
Yeah, I think so. Thank you.
So another thing that we can sometimes do here is something that's kind of a fancy word, but it's called depreciation. So let's say that I went out there and I bought this really expensive tool, right? Maybe this tool cost $1,000. Well, I can actually depreciate that, or basically take its usable life over time and take a little bit off of my taxes each year. I also have the option to take some bonus depreciation, or what we call sometimes Section 179, where I expense the entire amount. Those are actually two different things in the tax code, but both of them have the same effect. Meaning I paid $1,000, I get to deduct that entire $1,000 this year. Next question, which is better, Knox? The answer, it depends, right? It depends on whether I think I'm gonna make more this year or I'm gonna make more next year and the year after and the year after. So a tax professional can help you figure some of those things out, but there's more than one way to take care of that. So that's a great deduction too. Cell phone use. You know, I have this cell phone because of my business. I have this plan, which is very different than what I would just have in my personal life. Some of us, we carry multiple cell phones. I personally don't. That would drive me up the wall. But I know a lot of people that do, right? They have a separate cell phone for their business. In that case, that's going to be 100% deductible, that separate cell phone. In the case where I have the same cell phone, then I'm going to figure out sort of the difference in use, right? So 20% of my use is for my business, 80% of my use is for personal. Don't use those exact numbers, use whatever the numbers are for you, and I get to deduct that percentage of my cell phone bill as business use. Another great deduction, we already mentioned earlier that most of us, when we're taskers, work out of our home office as opposed to like having a real fancy building somewhere that we've gone out and rented. And if I have specific space for my home office that is reserved for my business and I don't do anything else in that space, so it could be in the garage even, right? But there's specific space where I store my tools and I have my computer and that is my business space. I don't do anything personal in that space. Then I can actually deduct some of my expenses, and there's two ways to do that. The simplest way, if it's up to 300 square feet, is I just say $5 per square foot. Pretty good deal, right? That's the simple way. There is a more complex way where I have to actually add all of my expenses in my home together and then take the percentage of use and all of that. We do that sometimes, especially if it's over 300 square feet. But the simplified method will work for most of you. Another thing we do is tolls and parking. So even when we do mileage using what we call the standard mileage, and we'll talk a little more about that in a minute, we can still deduct our tolls and parking. So if you live in an area where there's lots of tolls, you want to get a toll receipt and keep track of that. Guess what? Everlance helps you do all that too. You want to keep track of what your parking expenses are. All of that, Everlance is going to help you to do. Have you figured out Everlance is a good plan? There's another thing here, the qualified business income deduction. This is brand new this year, and quite frankly, most people do not know about this deduction. But the qualified business income deduction will allow you to take up to 20% of your net income. So let's talk about what net income is, right? I make 100 grand. I'm a great tasker, right? I make 100 grand. We're going to use real round numbers. I spend 50 grand on my supplies and my mileage and all of my expenses. Then my net is 50 grand. That's my profit, right? And I can take up to 20% of that as an additional income tax deduction. 20% of 50 grand, 10 grand. I call that a pretty good deduction. That's going to be the lesser of that 20% of my net profit on my Schedule C or my business part of my tax return, or 20% of my overall taxable income. The good news is your tax professional or your tax software is going to help you to kind of figure that out. I saw someone in here that said that their tax preparer told them that filing mileage doesn't make sense unless they're over a certain income bracket. And I would say that I almost certainly disagree. So here's the great thing about business, right? So I'm self-employed. I have that same 100 grand that I make. I mean, I'm a fantastic tasker, right? This is obviously a fake scenario, but I'm making 100 grand in my business. And I have $20,000 worth of deductible mileage. Well, I have two choices, don't I? I can not claim that $20,000 and instead pay both income tax plus 15.3% self-employment tax on that, or I can deduct that mileage, which is going to reduce 15.3% self-employment tax plus my income tax portion for that. Let's pretend it's not 100,000. Let's pretend it's 1,000. And I have $200 in mileage. What would I rather do? Would I rather pay taxes on that $200 or not pay taxes on that $200? That's a pretty easy choice for me.
All right. Well, thank you for that.
Absolutely.
And also appreciate the kind plugs for our software, Everlance. That's nice.
I strongly recommend that you get a software to help you do that. And Everlance is a good one.
Nice. So what are the first things I need to know about filing taxes as a tasker?
Yeah, so taxes are a little complex. I don't know too many of us outside of real tax nerds that say, "Hey, I'm so excited I get to file my taxes." My wife hates taxes, right? Most of us don't like dealing with taxes because they are complex. And frankly, when we're self-employed or an independent contractor, they're even more complex, right? There's nobody out there to help you do it all. You're your own boss. You have your own business. What that means is, for most of us, on our individual tax return, we're going to need to file a Schedule C. This is the business portion of our taxes. Now, if you have a separate corporation or company, I'm really not talking to you right now. I can help you with that, obviously. But today, we're talking about what most of us as taskers are. We are self-employed individuals that do this on our individual income tax return. And so we need a Schedule C. That's a business tax form, and it is included in the tax return. And Alex, you may want to say another word or two about what that Schedule C looks like and how you fill it out.
Yeah. So especially if you're brand new to being an independent worker, this is probably a little more intimidating or unusual to what you've done before. Being an employee is easy. Generally speaking, your taxes are withheld. You're probably expecting a refund at the end of the year. That might not be the case when you're self-employed. As Knox has said, the first thing to sort of determine is, what are you representing in the government in terms of how much money you've made? And what's going to help you do this is the Schedule C. So the Schedule C is basically saying, this was all my revenue, but I got to deduct all of my expenses, and this is my income. And this is what I'm telling the government my income is. And so if you see your Schedule C, this is what it looks like. And in box 1 here, it says gross receipts or sales. And so when you get your income from TaskRabbit, this is where you'll put that. On the next slide, we get a lot of questions around, hey, I'm looking at the Everlance app, or I'm doing my taxes on my own, and the vast majority of my business expenses are mileage related. Where do I put those in? This is sort of further down in the Schedule C. In part 4, it says car expenses. And so it says information in your vehicle. What's confusing here and confuses a lot of people is, hey, should I keep receipts of all the gas that I put in my car? My car went into the shop at a repair. There's a lot of individual sort of itemized expenses that you'll have for your car. And then you're also recording your mileage. And so what you're really supposed to do here is actually pick one of those methods. So the standard mileage method we'll share with you on the next slide. But your vehicle expenses goes in this box. So I guess, Knox, if you could sort of tell us a little bit more about, what is the standard rate method, and how do I know whether that's the one I'm supposed to use, or, do I even need to keep receipts of all this other stuff?
Yeah, it's a great question. So let me just, from the outset, say that you have to keep track of your mileage regardless of which method you use. And a lot of people get confused about that. So let me again say that you have to keep track of your mileage regardless of which way you go. So there's 2 ways to go. One is I use the standard rate. I take my business miles, and for 2018, I multiply that by 0.545 or 54.5 cents a mile. That's pretty good, right? I have 1,000 miles. I get to take $545 as a deduction because of that. So that's kind of the way that works. And great news, in 2019, it's even better. We are 58 cents a mile for this year. But of course, we're filling out our 2018 taxes right now, right? So we're going to keep track of these miles. The business miles, which we've helped to sort in Everlance, it's going to help us to do that. In the business miles, we don't have to keep any other receipts. We just have to have what the IRS terms a contemporaneous mileage log. You cannot, after the fact, at the time where the IRS says, hey, I'm going to audit you, then go back and try to recreate your mileage log. There are lots of tax court cases where the IRS and the feds have said, nope, doesn't work that way. Because the tax code actually says you need a contemporaneous mileage log. This is where an app like Everlance shines so much. Now, you also do have the option of the actual expenses method. But let me say it again because it's so important. You still have to keep track of your miles. In this scenario, we're going to use easy math. I drive 10,000 miles a year. I wish I drive a lot more than that. But we're going to pretend I drive 10,000 miles a year. Half of that is for business, 5,000 miles, right? Half of that is personal, 5,000 miles. I'm going to keep every gas receipt, every time I got an oil change, every car payment, insurance, every time I had to go to Firestone, get my tires rotated, whatever it is that I had to do to work on that car, I have to keep track of every one of those receipts. Then I'm going to say, okay, 50% of that I get to deduct because that's the business use of my vehicle as proven by my contemporaneous mileage log, right? Or 50% goes to the other. Now, if the ratio is different, then the ratio is different. 20% business miles, you're going to take 20% of it. Does that sound like that's easier? I can answer the question for you. It's not easier in any way, shape, or form. For 90% of you on this call, you're going to be better off taking the standard mileage rate.
Thanks. Yeah. And this is by no means tax advice, but I remember we were looking at some data and we thought that the cash cost of running a Prius was somewhere in the low 20s in terms of cents per mile. And the IRS is giving you 54.5 cents per mile. And so it is actually can be a very generous form of basically helping you to write off your taxes, because they also don't know whether the average taxpayer is driving, a hugely expensive Hummer to operate or a very efficient Prius. And they're kind of giving you the benefit of the doubt on that one. What about an example of, maybe you could sort of show us what, actual versus standard would look like for mileage?
Yeah, so in this scenario, we have a ratio here. We'll talk about that in a minute, but we have 3,680 miles that are business and 4,680 miles that are personal. So we have, roughly 44% here, but we take that 3,680 miles, we multiply it by our standard mileage rate. That gives us just over $2,000 worth of deduction, right? 3,680 times 0.545, $2,005.60. We're going to call that just over $2,000. That's a significant deduction, right? Let's compare the actual expenses. So same scenario, 3,680 miles for business, 4,680 miles for personal. My total car expenses, $1,750. I have a paid off car. I drive an old car. By the way, that's true for me. I drive a 2000 Mazda because I drive them until they fall apart. It has 225,000 miles on it. Guess what? My expenses are not 54.5 cents per mile, right? I love it. Guess which method I claim? I use the standard mileage rate. Here's why. If I take that $1,750, multiply it by my business use percentage, how do I get that? I take my total mileage, so I add the business and the personal together. In this case, that's 83.60, and then I divide my business mileage by that, 44%, just above that. And my deduction is $770.30. Which would you rather deduct? $770.30? $2,005.60. Oh, and by the way, to deduct this $770, you better keep all of these receipts, because if the IRS comes back, they want to see every one of them plus your mileage log. Gee, what's the better deal? That's a tough one.
All right. So this next question I'll answer, which is, basically, how do you get a 1099? So if you're new to TaskRabbit, do you get this form in the mail? How does it work? And the way it works is, if you've made over $20,000 from a platform, that could be TaskRabbit, Uber, something like that, you get a form called 1099K. But if you receive less than that, you need to go find this information on your own. The 1099K is also created if you have more than 200 tasks in 2018. And so your question is, who will send me the 1099? It'll be a company called Braintree. So that's who processes TaskRabbit's payments. And so if you get paid through TaskRabbit, Braintree is sending you that information, and you'll get a 1099 that way. Does that answer your guys' question in terms about where the 1099 comes from? Good, cool. Another question is, does anyone know what category or occupation code we use? I don't know what that means, so hopefully Knox does.
I do. So the short answer is there's so many different things you can do with TaskRabbit that I can't answer that definitively, but I'll answer what I think most of you probably are, and that is a code that is for other personal and household goods and repairs. If you think that category describes what you do, then your code is 811490. If that does not describe what you do not use that code because it would not be appropriate. But I think that would be appropriate for most of you. And again, that business code that's going to go on the upper right of your Schedule C, if you fit into that other personal and household goods and repairs, that's going to be 811490. Fantastic question.
Okay. What about these other sort of common questions we get about 1099s?
Yeah, so what if I didn't get a 1099, right? So he just mentioned you have to do $20,000 to get a 1099K, which is what Braintree is going to send you, and also a certain number of transactions, right? You have to actually meet both of those categories. That means that many of you will not get the 1099K. So the common question is, well, then do I have to include it? And the answer, of course, is yes. So what the tax code says is all income is taxable unless it is explicitly excluded in the tax code. So let me just kind of put that in human speak. It's taxable, right? So yeah, you still have to put it in. So that line 1 on your Schedule C that he pointed to earlier where you put your gross receipts and sales, that's going to be the total amount that you brought in. That means you need to be keeping track of that. So the most ideal scenario is you have a separate bank account where you put that into. That makes it easy. But definitely keep track of it. Now, you can keep track of it in Excel. You can keep track of it on paper. You can keep track of it using one of the paid software programs out there. I'm not going to tell you how you have to keep track of it, but do keep track of it. That's sort of the bottom line there. What about if I have multiple jobs? I do Tasker, and so I have from TaskRabbit, I have this 1099K that came in from Braintree, but I also do some things on the side for other people, and I got a 1099 from this other place. Can I file them together on my Schedule C? The answer is yes. It's all going to go in that box 1 of the Schedule C, that gross receipts and sales. So yes, you would put all that together and also include the income that you received but did not get a 1099 for. Next question. Well, Knox, I'm employed and I do this on the side, so I get a W-2. Do I have to file separate tax returns? And unless you have created a separate entity with the state, like a corporation or an LLC or something like that, then the answer is no, you do not file a separate tax return. And in some cases, even in an LLC, if you don't have any partners, it's still going to be on the same tax return. So for most of you on this call, it will still be on the same 1040. That's the individual income tax return. You're going to put your self-employment income on the Schedule C. Your W-2s, of course, are just going to be treated like they always have been.
Mm-hmm. That's helpful. And someone else just mentioned to me that you can always log into TaskRabbit, and then transaction summary, there should be all your jobs and wages earned. So that should help as well. So one of the kind of common questions we get is, they're just people are just trying to understand, like, will I pay taxes, right? So generally, most people receive a refund. And the way that we think about this is pretty simple. It's that if your only job is TaskRabbit and other forms of self-employment, you're probably going to pay taxes unless you've been withholding taxes and paying estimated taxes, or sometimes called quarterly taxes. Essentially what's happened there is no one's paid any taxes to the government yet, right? When you're an employee, the government's paying taxes as part of your paycheck. If you're a TaskRabbit and an employee, it could go both ways, right? Depending on how much you've withheld. If you're mostly a W-2 employee and you do a little bit of TaskRabbit, you might get a refund. So kind of a helpful sort of general rubric, but it pays to sort of figure out where you are in real time so you don't have a big surprise at the end of the year. So why record your mileage? I feel like we've hit on this a ton, so I'll skip right through it. But really in our experience, mileage can be 80% plus of your business expenses. Another thing that's really important is that a lot of miles go unrecorded. And so imagine that you drove, 40 miles for work, right? It was a long job and, you had to get supplies and something like that. Well, that would be worth over $20 as a business expense. And so that's got to be one of the easiest things you can do to reduce your taxes, is just remember to do that. Our app, of course, specializes in automatically recording all those things for you. So when you open up Everlance, you can just sort of click, find that trip and swipe it to the right. And that's how that works. One of the other things we talked about is that we have discounts for filing taxes. So we've partnered with TaxAct. TaxAct is a digital DIY, do-it-yourself tax provider, very similar to TurboTax, if you know them. If you click on this link, you'll get 50% off the TaxAct software. Another thing that's always helpful is to speak with someone. So as you can imagine, there's lots of potential for saving more money in your taxes. And when you're self-employed, there's way more forms of savings in terms of really understanding the tax code. So what can you deduct? Maybe special circumstances with your spouse or other things that are going on your business. So I think this is a good chance to sort of hear from Knox how he works with clients over there.
Yeah, absolutely. So I work for a company called Happy Tax. Some of you have heard of it, but our whole thing is smile. It's time to file, right? We want to make the tax preparation experience not so painful. Remember we talked about earlier how most people hate taxes? I mean, it's the thing that we just cringe when we have to do. Our whole goal, our whole reason we exist as a company is to make the tax filing process happy. So we're going to do everything we can to be simple, to be fair, to give you transparent pricing. And we have a special deal that we've worked out for you. Now, obviously, it costs more to hire a professional than it does to do it yourself, right? So part of what you have to weigh is A, do you think you can do it yourself correctly? And B, how much is your time worth? And how much is your frustration worth? But if you decide you want help, then we have two kind of plans that I think will fit. We have our moderate plan, which is the $300 plan, and we have the premium plan, which is a $500 plan. And when you get a copy of the slide, you'll see kind of what that looks like. But it just depends how much is in your return, basically. And we today are prepared to offer you a 20% discount. You can go to happytax.com/TaskRabbit. So happytax.com/TaskRabbit. And we've activated a special discount code for you. It's HT20, so like Happy Tax 20% off, right? Great discount on that premium plan. That's a $100 discount. So that's pretty significant discount. You work with myself or more likely one of the members of my team. And all of our professionals are credentialed, which is kind of different. So what that means is that everyone that works in my department is a certified public accountant or an enrolled agent or an attorney. We don't hire people that just come in for the tax season and have 2 weeks of training. That's not who we are. We are a professional firm. And so if you want to know it's done right, if you want an audit assistance guarantee that says, hey, if the IRS ever comes back and questions this, we're going to stand behind it and we are actually going to represent you in that audit and take care of you, we do that. We guarantee an accurate return based on the information that you give us, and we guarantee that we're going to get you the largest refund that is allowable under law. So that's kind of who we are. If you're interested in that, once again, it's happytax.com/TaskRabbit.
Awesome. And guys, please keep the questions coming. We'd love to be as helpful as we can in the time that we have. So ask them in chat. In terms of next steps, everyone who's registered for this will get a summary email. So don't worry about that. You'll get an email with a recording of this webinar and some of those links that are nicely sort of bulleted out for you. Knox's link is happytax.com/TaskRabbit, but you'll be able to click on it on that email. And with that, I'd love to just answer a few more questions. So let's see. Nini's back. Nice to hear from you again. She says that my preparer told me to choose standard deduction or Schedule C depending on the total 1099 income. Please clarify.
So I'm hoping that you misunderstood. If you did not misunderstand, you need a new preparer. And I don't know how to say that any simpler than that. The standard deduction relates to the Schedule A. So that's itemized deductions, where you either get to itemize based on your itemized deductions. That's things like charitable contributions, the taxes that you pay, your mortgage interest, and a few other things that are on there too. Those are the biggies. That's your Schedule A, or your itemized deductions. and you either claim that or the standard deduction. The standard deduction is going to be, for about 92% of people, the best way to go this year because it's greatly increased under the new tax law. However, the Schedule C is completely unrelated to the standard deduction. So the Schedule C is where you put your business income as a sole proprietor or self-employed person. That's what goes on the Schedule C, and it doesn't matter how much self-employment income you have, it goes on there. So the two are completely unrelated. I'm hoping you just misunderstood your tax preparer, but if not, please go get a new one.
Thanks. And I think one of the things that, I think is helpful about sort of a tax orientation about this is just to give folks the idea, like sort of the thing that sort of in the back of their brain that says, hey, can I write this off? So the next time you're buying a supply or thinking about your business, you're wondering whether you have a home office deduction. I think really just thinking of yourself as a miniature corporation, which everyone is, right? If you're self-employed or independent contractor, and thinking about your revenue and any expense that goes into offsetting that revenue is super helpful. It'll just make you more mindful. And the name of the game is to really just reduce your income as reported, right? Of course, you can't change your revenue. Your revenue is your revenue. You wouldn't want to, lie about that. And I think the IRS will probably have a copy of that revenue anyways from potentially the platform that you work with. And so what you can do is help by making sure you get the full credit for all expenses, whether it's mileage or something else. And with that, I think we're done. I don't see any other questions. I got one last one. I'm hearing 1099 is generated by either $20,000 or 200 plus tasks for the first time. Where can I find info on TaskRabbit site about that? So I think that's the case. What I would do is log into the TaskRabbit website and check out the summary of transactions, and you can at least start there by seeing the total revenue, which will should match with the 1099. It's more that I think you're required to send out a 1099 if either of those requirements are hit. But feel free we could try to follow up with on that question for you with TaskRabbit, or you can reach out to them directly. And that'd be great. So,
so let me clarify a little bit on that, if you don't mind.
Sure.
The IRS requirement on that is actually both. So you have to get 200,000 and have the number of transactions, both of those. But that does not preclude Braintree payments or anybody else from sending out one even below the threshold. But I don't think Braintree does. I happen to use Braintree myself, so I know what they do. And the bottom line is it is both of those. So I hope that helps to clarify that.
Okay. That's helpful. Well, I want to thank everyone for dialing in and listening. I apologize for the hiccups at the start. I know that's always, we always think we're going to do better on that, and there's inevitably something like that. And wanted to really thank Knox for sharing his time and insights. It's super busy time of the year if you're a tax preparer, so borrowing someone's valuable time is really wonderful, and we wanted to thank you so much for joining us.
Absolutely. We're glad to be here and hope to work with many of you in the future. Thanks for having me.
Okay. Bye, guys.